Assalamualaikum. Welcome to my tutorial video about making financial model. On this first episode, I will discuss about essential basic elements which are needed in making financial model, including relationship between those elements. Let's start it on the first element. The first step in making financial model is making a revenue and cost projections. This projection includes projection of revenues, direct costs, and operating costs. In financial model, projection of revenues and costs are useful in making net income projection. The second element is investment and source of financing. In making investment projection, we have to list all assets that will be acquired, whether fixed assets, for instance building, or intangible assets such as brand and pre-operating expenses. The source of funding to finance those investments also must be specified, either in the form of equity or loan. In financial model, investment projection is connected to list of fixed and intangible assets, cash flow from investment, and non-current assets on balance sheet. Meanwhile, source of financing is related with loan and cost of financing calculation, also non-current liabilities on balance sheet. The third element is list of fixed and intangible assets. The list calculates value of net asset after accumulated depreciation and amortization. In financial model, calculation of fixed and intangible assets are connected to operating costs on income statement, specifically on depreciation and amortization expenses. On balance sheet, those assets calculation are related to non-current assets, which is on net assets value after accumulated depreciation and amortization. Next, on the fourth element, which are loan and cost of financing. The calculation includes the amount of loan and maturity, also the amount of loan costs that must be paid. In financial model, cost of financing is connected to net income projection. Meanwhile, principal and maturity of the loan are correlated to cash flow from financing. Also, with non-current liabilities on balance sheet that has been stated previously. The fifth element is working capital. Working capital is related to value of current assets, excluding cash, and current liabilities on balance sheet. In financial model, working capital projection is connected to cash flow from operation. On balance sheet, of course, is related to the value of current assets and current liabilities. On this last section, I will explain about the relation between financial statements on financial model. In making financial model, the first order is making net income statement projection, then cash flow projection, and the last one is balance sheet projection. Net income projection determines the value of cash flow from operation and retained earning or retained loss. Meanwhile, cash flow projection determines the value of cash on hand and banks on balance sheet. The following are the relationship between financial statements on financial model. The projection of net income affects cash flow from operation and retained earning or retained loss on balance sheet. Sequentially, the result of cash flow projection determines the value of current assets, which is cash on hands and banks. I show you the recap of all the connection. If this diagram is too complicated to understand, you can rewatch the video again. That's all, and see you later on my next video, inshallah. Wassalamualaikum.